Welcome everyone, and thank you for joining the Niti Aayog FinTech Month session on InsurTech. Super excited to actually host a panel of incredible sort of entrepreneurs and CEOs and really the trailblazers in the industry. I'll start off with a quick round of introductions. First up, we have Mr. Yashish Dahiya, Chairman, Founder, CEO of PolicyBazaar, or PB FinTech as we know it now. It's coming off one of the biggest blockbuster IPOs in the tech industry. Congratulations, Yashish. Next up, we have Mr. Anuj Gulati, Founding Managing Director and CEO of Care, formerly Religare. He's setting up one of the most innovative healthcare insurance companies ground up, and again, looking to transform the entire Indian health insurance industry. And lastly, least but not last, we have Varun Dua, founder and CEO of Acko, commonly known as India's first digital end-to-end insurance manufacturer and distributor. And in their own ways, each of them are completely transforming the industry. It's an incredible time to be in InsurTech. With the pandemic, more than ever, people understand the need for insurance. With the geo effect and the pandemic over the last 5 years, we've seen over 500 million people get connected to the internet, which means insurance manufacturers, aggregators, distributors can connect with their customers and understand their needs directly more than ever. With that, I'll quickly hand it over. Yashish, you first, perhaps, just quick introductions, more detail. I don't do it justice.
Thanks, Sameer. Thank you for having me here. Yeah, we started, in 2008, pretty much about the same time, I think, as Anuj started. So our journeys were quite coincidental in that sense. And I think the biggest problem that we have been trying to solve is that of awareness. Because all said and done, even today, everybody speaks about low penetration, but we believe the biggest issue is people just do not buy insurance, right? And health insurance or life insurance, for that matter, pretty much what the retail consumer at that time bought was just motor insurance because it was compulsory to buy it. Otherwise, the police guy would catch you. But other than that, people did not really buy insurance. And I think that's been the toughest task, right, over the last 14 years or so, educating people that, look, if somebody was to die, somebody was to fall sick, that's a pretty serious situation. And at that stage, you don't want to be taking money out of, your pocket to be spending for children's education, for your medical bills, for your house rent, etc. So it makes sense. And building that education where today, both health and life are actually more researched or more searched than motor. India has been unique in that journey, huh, Sameer? So this has not happened anywhere else in the world, by the way, where people research health and life more than motor. So I think we are quite proud of that achievement, that we've taken India in that direction where at least the research is happening. But still, I think the purchase is still quite low. And even the research is very low compared to the population of India, right? So I guess the big task still, to a large extent, does stay awareness build. And then the task becomes, somewhat efficiency of services, of customer service as well as claims, which is its own battle, because it's not one organization that that someone like us is working with. We are working with 50 organizations, and it's the lowest common denominator that determines our customer service to some extent, right? So Anuj may have a fantastic service, but XYZ may not have a fantastic service, and the customer, we as an independent player, do have to provide all the options. And our service level is eventually determined by not just Anuj's service, but also by XYZ's service. And so bringing the entire industry up in terms of customer service levels and claims levels becomes a big onus. And that's what makes the task quite difficult. But yeah, we're on that journey. We've taken that path, and we are going to keep trying that.
Thanks so much, Yashish. And taking a cue from your point on the transition from education and awareness to people actually buying health insurance, particularly highly underpenetrated in India. The best of times we underpenetrate, and the worst of times it really does hurt. Anuj, I would request your sort of inputs on how CARE is thinking about this, how you're thinking about the health sector. Would really love to hear your thoughts as well in your journey and what the path forward looks like.
Sure. Thanks, Niti Aayog, for doing this. Thank you, Sameer, for this invite. Sameer, we started, like Yashish just mentioned, we started this journey in 2009. Step one, to start an insurance company in India, you need a license. We worked with the regulator, got a license, started operations in mid-2012. And so we'll be close to 10 years sometime this year. And it's been a phenomenal journey. The original idea was that originally there were, as you know, life and non-life companies operating in India, and both were offering health insurance products in some form or the other. Whereas global experience clearly suggested that health insurance is a separate category in itself, and there are specialist health insurance companies. I think the regulator recognized that, allowed for specialist health insurance companies to be set up, and here we are, right? From a market opportunity under-penetration standpoint, I think the numbers are stuck. Overall, as an industry, give or take, we're about it's 4% of GDP, all of healthcare spend that we make in this country, a little over $100 billion a year. Health insurance, with all the growth that we've had over the last couple of decades, even this year will end up at about $11-12 billion, right? If you take care of all spends that the central government, state government make for their own employees, some corporates do directly on a self-insurance model for their customers, so for their employees and so on and so forth. All of that put together, even then, over 60% of all healthcare spend in India is out of pocket. That makes India one of the largest, highest out-of-pocket markets in the world. So that is the macro, that is the opportunity. And I think the beauty is that I personally started my insurance career in the year 2003. 2003, health insurance in India was 1,000 crores. 2022, in March 2022, it will be 80,000 crores. So I personally have seen 1,000 go to 80,000, right? And it's not stopping here. It's only accelerating in that sense, right? So it's just we're in the right place at the right time. It's a good time to be present and have an opportunity to shape this sector in that sense. And I think as CARE, we are right in the center of it. We are attempting to do what it takes to reach out to consumers, build that awareness, give them more clarity on the product so that they feel comfortable, they can trust the product, the category, work with partners like yourself, PolicyBazaar and so on, so that they feel confident taking this product to the masses. And of course, work around all the good things around digitization, the payment platform, so on and so forth, so that we can make it easier for the consumer, that experience that they have through the whole buying and servicing process, so that they feel comfortable continuing to stay with this category in that sense.
Thanks, Anuj. I will come back and dig in more on the need of the market and why the penetration levels are so low. Varun, taking off from that one, you are trying to do the sort of unimaginable 10 years ago and the super ambitious even 5 years ago. You're trying to manufacture, distribute end-to-end fully digitally. That's how I know you. That's how I think a lot of the market sees Acko. Would love to hear your sort of version of the story, why you decided to set up Acko the way you have, what your early learnings are, and what you're most excited about in the next 5 years as well.
Firstly, thanks to Niti Aayog and to you for having me over. Am I audible clearly?
Yes.
Yeah. So our journey is much, my personal journey may be longer, but Acko journey is relatively younger compared to Yashish and Anuj's journey. So we started back in 2017. At least my learning got me to a point where saying the way things are evolving, digital is not just an access medium. It could really change the cost structures of how the industry operates, whether it's distribution costs, whether it's manufacturing costs, your ability to underwrite, to introduce products which were probably unviable to be introduced earlier. And this sort of led us to believe that maybe manufacturing is the route. And you're absolutely right. Probably 10 years ago, it wasn't possible. I'm reasonably thankful to the regulator that back in 2017, they gave a company like us a chance to be able to come in. And frankly, we had to work with them all the way for 2 years to get them to understand that why a company like us would probably at least try to do something different. We're not looking at it from just a pure digital standpoint. Like I said, it has to fundamentally make sense to the consumer from a cost structure perspective. If the product is cheaper, easier to access, I can probably induce trials with smaller products and get you into the insurance ecosystem. That was the flexibility that we were looking with manufacturing, and that's really the reason for being digital. It's not because digital is nowadays the thing to do. I had seen the industry from you know, I've been an employee, I've been a software service provider to the industry, I've been a broker, so I've had a you know, long stint with it, almost 20 years now. And that cost structure breakage, the ability to underwrite better, the ability to create new products and induce trials, to work with partners such as you or Amazon and create sachet products which could really get you into the fold and get you to experience something which you're really not, it's not top of mind, like Yashish said, it's not something you wake up with, right? But if I could do something which is minuscule and make it a little bit of impulse, I get you to the fold, I start having a conversation with you in some shape or form. So at least for Acko, from the next 5 years, while you know Yashish and Anuj have very well covered the macros, there's an awareness problem. I don't think growth is going to be an issue. What Acko is essentially trying to do is to figure out how do we use our technology first DNA to be able to price better, to be able to create products which can create access faster, and really take part in this massive growth that's anyways happening.
Thanks, Varun. So again, building of that one, and given that this is the FinTech month that we're talking about, there have been sectors over the last 5 to 7 years. We started our journey in payments, which is super competitive. Obviously, India's also got one of the world's, or has the world's largest interoperable network in UPI today. So when we counted our competitors 5 years ago, we had a list where we had about 150 odd people. Every bank was playing on UPI, every payments company was playing, every wallet was playing. We've had a very competitive market, and it's been led through technology innovation. We've seen similar sort of excitement, especially from the investment community and the startup community around lending. And in 2020 and 2021, we also saw the advent of multiple unicorns in the wealth sector, and again, super crazy excitement and euphoria around the markets. Some of that attributable just to a unprecedented bull run. My first question to the panelists is, why hasn't InsurTech attracted more entrepreneurs over the last 8 to 10 to 15 years in India, given how large the opportunity is? Each of you talked about sort of how fast it's grown. Anuj, you talked about a market that's grown 80x in the last decade and a half. Yashish, clearly you had one of the most successful startup businesses in India. We've seen the success all around. What would it take for 50 more companies to come into this industry to really get to 1 billion plus people over time? And linked to that, for all the young wannabe entrepreneurs or early stage entrepreneurs who are here on the listening in, what are the big green spaces over the next 5 years you believe people should dive sort of just straight into? Where's the market of the future, and what's holding people back? Anyone? I won't go in any particular order.
See, if you, I'll try to take a shot at it. I think people do payments all the time. People, you know, if you stood outside the road and said, "Does anybody want to take a loan?" I think if you ask 10 people, a couple of people will say, hi, if you're giving me money, yeah, I'd take it. I think, I remember even today when I get a call, sometimes, a person says, I'm calling from a bank, I have a savings product for you. And I asked them, is there a component of insurance in this? They said, no, sir. There's no insurance in this. This is only a savings product. The insurance is there, but it's for free. What I'm trying to say is that even with the biggest of push, there's a huge reluctance in the consumers to purchase insurance. Specifically insurance, which is going to be of most use to the consumers around life, health, etc. We call it voluntary insurance, right? Now, in terms of number of authors, there will be lots of attempts. There will be lots of attempts. Like we were certainly, today we are looking like the oldest player in the panel, but PolicyBazaar was not the first player, definitely not. We had about 10 players doing exactly what PolicyBazaar does before PolicyBazaar started. And I think there are service elements, there are some claims elements, etc. But it's the consumer engagement is a big pain point, and that does have to be solved to some extent, and the service element has to be solved as well. I think the second part is if I was to just step back and look at the journey of both Anuj and Varun. Varun just mentioned it took him 2 years to get a license. I remember it took Anuj 3 years perhaps to get the license. Which entrepreneur can sit there for a couple of years waiting for a license to come before they can start operating? Today you want to do lending, you can have an NBFC structure and start. And if I can recollect, there were lots of other attempts around Varun's time who also tried to get a license. I know Amit Ganorkar tried to get a license. I know Rajesh Rillan tried to get a license. People have not been able to get a license. Paytm's been trying to get a license. People have not been able to get a license. So I think it's not been a very easy thing to get. You have to have a lot of capital to start with. Hats off to Varun that he's perhaps the only individual who's been able to get a license as an individual, which is PE backed, but others haven't. And you do require that license to be able to innovate, to be able to, set up insurance operations. Otherwise, you're dependent on a manufacturer.
So you mentioned two different things. I think the licensing regime, definitely on the insurance side, we've gone through it, is definitely harder to get a license. And I think here the Reserve Bank on the other side actually is moved towards much more of a liberalized on-tap application process. Other than the banking license, pretty much everything you can apply and get fast. So I agree with you there. I think we need more proactive approach to actually getting more.
Sameer, there is a way. There is a way, right? If you go to countries like Netherlands, etc., they have this MGA structure.
I was just going to say that.
Managing General Agent structure. Everybody does not need to be a manufacturer.
Yep.
Because an MGA can pretty much be doing everything. See, when you're a manufacturer, your biggest risk is your capital risk.
Yes.
That if the people are not able to have claims, you're able to pay for those claims, and that is why the licensing is required, right? Really, and that's perfectly fine. But somebody else may have the distribution capability, right. And thus the MGA structure is a solution in such a situation, which is what the NBFC structure is really. The NBFC is just that, nothing more than that. But anyway, I'll stop there. I think I've hogged more time.
Yeah. No, and I think following up on that one, I think the question I actually have for Anuj. Most sectors that are seeing a revolution, here I'm pushing back on what Yashish said. I know you're right that people don't think of buying insurance nearly as much as they think of availing of a loan or having to do payments. But there have been very strong barriers to entry for people to say link a bank account. We saw this with UPI. I couldn't convince my own mother or my wife to link their bank account when UPI launched. I mean, it's unnerving in India. That too on a mobile app with an app name that you've never heard of. We've seen this with people taking loans on usurious terms from people they don't know. So in that sense, to me, every time there is that much friction, but you know that there's a need. Generally, the market, especially the venture capital market and the entrepreneurial market meets the market. What are you seeing that makes you excited over the next 5 years, 10 years, that others are perhaps not? If you could go back in time, would you be exactly where you're at today? Or would you not be playing in InsurTech? And if you are, what do you know that a 23-year-old listening in should be trying to do?
Sure, Sameer. I think let me try and make it a little tangible. Let's break health insurance down into 3 large segments for starters. There is employer-employee group health insurance, which is close to 45 to 50% of the overall health insurance market in India. There is retail, individuals buying for themselves, which is another 40-45% of the market. And about close to 5 to 10% of the market is financial inclusion, which is government paying premium for the underprivileged in the country, right? The Ayushman Bharat program and so on and so forth. And I think there are opportunities in each of these 3 spaces. When I think of the first segment, the employer-employee segment, I think we've done a phenomenal job as an industry in being able to understand risk, offer risk products, and be able to deliver them primarily through an intermediated system, right? The consumer is, but for I think for the longest period I've held back and said, our customer is the institution, is the buyer within the institution, which could be the HR person, the procurement person, the finance person, whoever, right? And beyond that, the employee is their employee. What I'm increasingly starting to see, and I think a lot more work is being done and needs to be done to say the consumer is the actual employee. It's their experience that's going to count. Their experience of enrolling, their experience at the time of claim, and by the way, their holistic experience around navigating healthcare, around preventive solutions and so on and so forth, right? And there's a hell of a lot of work to be done in this area, right? And it cannot be done through physical intervention. It will require not only base level digitization, but a lot more around stitching up ecosystem and making it personalized, right? When you think about the retail opportunity, there are players like yourself, like PolicyBazaar and Acko trying to go direct, right? Where you are taking this product to the consumer. But once again, the consumer experience of being able to enroll at the time of claim and at the time of renewal and servicing and so on and so forth. I just believe there is a lot more that can be done so that we are able to build that much more trust, make it that much more simple for the consumer. Of course, in that whole space, a lot more work needs to be done around product in itself. And very often we don't have data. So I think the regulator, by the way, in this one has been very, very encouraging and forthcoming to say, let's do sandbox, let's do pilot products, so on and so forth, by which we are able to open up newer segments, right? The third big play around Ayushman Bharat and so on and so forth, I think there, given that it is the consumer is clearly identified, the beneficiary is clearly identified. I think a lot more work needs to be done to make those schemes sustainable around fraud and so on and so forth, around getting smaller hospitals to come back and enroll and be able to seamlessly offer service to those consumers, right? So in each of if you look at each of these areas, there are large problems yet to be solved. So I would be very encouraging, and none of them, by the way, because the cherry picking is over. I mean, we made getting a license come in hard, but I can assure you that persistence pays, follow the rules, it's quite clear, follow the rules and you get it eventually, right? But that's, to me, that is the cherry picking. That's the easy thing to do. The harder one is some of these problems from here on. And my view is that a lot more wealth will be created around solving some of these problems, right? So I would be very encouraging and a huge opportunity in that sense coming in this area in the times to come.
Got it. Thank you. Varun, a lot of the problems that Anuj talked about, Yashish talked about, you're trying to solve them on both ends of the spectrum. trying to come up with the right products, the sachets. Luckily, a lot of your early products, at least the ones I've seen, are in areas where the need is the fact that the cop's going to catch you and actually find you. So the need is very real in people's minds. It's not a choice, it's the law. But even there, you managed to actually carve out a very interesting niche in terms of product positioning, product understanding on the distribution side. Learnings thus far, if you are not playing in the category you're in, it's largely GI. How would you decide which insurance vertical to enter next? If you could clone yourself and you had to get into life or health in a different way to solve the problems that Anuj mentioned, how should young engineers who are trying to actually get into fintech as the hot new buzzword think about this space? Because you're seeing it differently than others, I guess, in a sense. You're taking or placing slightly different bets. What is your guidance going to be if somebody walked up to you and said, I want to learn from you on how to actually play in this industry? What are the bets that I should place?
Yeah, that's a tough one, but let me attempt. I think I just want to, but before I get to that specific answer, I just wanted to make an extension and of the points that Yashish and Anuj made, where I see some of the challenges. You also mentioned this, there's friction to every adoption, right? Payments, UPI, you mentioned that. One of the challenges with insurance as a category in itself, and which is really not helped by maybe the current regulatory framework, and hopefully it will evolve, is that there is no immediate gratification in the product. And that's really a human psychological issue that cannot be solved, in my opinion, unless there is with payments. Okay, I need to, once it starts getting easier, there is virality in the concept, right? Like it just, the network effect start to take in. Lending, I need money, I'm always interested in, like getting money. Yashish spoke about that. This is something that we're all wired, I believe, as human beings for instant gratification. And whenever we have to do long-term thinking or the boring stuff, I think we all sort of, just walk away or push it out for later. And that's the real problem I perceive with insurance, is the fact that, this is something that will do you good at some point in the future, and hopefully you'd never need it. But that's a hard sell. And that's the reason it's not a frequent category. You make these decisions, unlike payments and food delivery and bunch of these things where you can get a user habituated to it. You don't have options to get the user habituated to it. It's trust buys, it's once in lifetime buys. Health insurance maybe twice in your lifetime, life insurance once in your life, car insurance a year. These are not high frequency categories. So no immediate gratification, no frequency is a tough problem to solve. And even creating some impulse for the category. We all know great work that the payment side is done on whether it was cashbacks or Google Pay doing scratch cards, and just getting people addicted to a little bit of gamification to get something like that is not possible in insurance. If I try to offer a product today saying if you buy today there's 50 rupees cashback, I'm flouting a law. Is just we're not able to create impulse in the category. I think is my view. I don't know what Yashish and Anuj think. It's like one of those drudgery decisions that you end up taking. This is just to contextualize. And somewhere I think both the industry partly needs to get its game up. Partly we need to work with the regulator together to get some impulsiveness going into the category. Use some psychological techniques to get people to probably take these decisions faster. I think that I just wanted to contextualize that part, and no frequency, no immediate gratification. If you abstract it out, to me those are very hard problems to solve. So that's one area. Second, as far as the spaces available is massive. I think today one of the biggest areas that I would focus on if I wasn't doing what I'm doing right now is just data, right? Like today, as much we have on the lending side, the alternative scoring, there's just your social surrogate scoring, and I don't know what all is happening on the lending side. There's very little on insurance, right? So on car insurance as a product, which should be, or auto insurance, which should be proliferated with data. We have very little data. Today, I don't even know, the industry is not even aware of accident zones in cities, which kind of consumer, which pin codes or which areas are theft prone. What can we do? Work with local law enforcement to figure out how do we make those areas less theft prone. There's just very little data, on auto, on health, with NDHM and all of these pieces coming together. I think that data pipe, there could be various ways of monetizing it, but data pipe to make, and the data is not just from a standpoint of underwriting better. I think it can reduce onboarding costs. It can reduce friction. It can do a lot of things. Today, a big challenge is we treat pretty much everybody like a risk, and we try to, in the onboarding process, figure out, or in the exit process, which is the claim, that how many friction points can we put so that we don't get defrauded, in some sense, because there is just not enough democratized data available to be able to make some choices there easily. I think that is a huge problem. And each of these are huge verticals. Health has a whole different problem. Auto has a whole different problem. Some on the commercial insurance side of which kind of factories can catch fire, or the eastern belt of the country, which is ravaged by cyclones every few years. There's just so much data work to be done. I think everyone's solving distribution, access, product innovation, but I think there's deep work on the data side that could really help.
Okay, so not enough data, not enough impulse, not enough frequency, hard to get licenses off the ground easily, especially if you don't have enough exposure or experience in the industry. As a geek, every time I hear those things, that just sounds like it's ripe for disruption. And I see 3 people here who are disrupting. And we entered distribution about 18 months back as well. So I'll share a couple of outside-in observations to stir the pot a bit. The one thing I think that worked really well for at least the payments industry, and I think the banking industry, for example, bodies like IBA are super, super vibrant and strong, and have managed to actually come up with one voice and be able to sort of negotiate slowly and steadily, but negotiate wins to open up the market and open up more products for the same market with the regulator, with the government. As I said, I'm surprised given how anemic the premium coverage is in India, how few fintechs are playing, but you guys have expressed really well all of the barriers. But I'm also surprised that I can't think of an equivalent of something like, say, a PCI, which has like 150 members in payments, where a lot of these things are being discussed in the public narrative. I see that in broking, as in stock broking and mutual funds. I see a lot of coordinated work between the government and mutual funds industry on campaigns like Mutual Fund Sahiya, for example. It's had an impact. So my first question, and I'll include myself in the mix, is what do all of us who are sort of playing in this industry do better to organize ourselves better, so that these are not localized discussions with the regulator or with the policymakers, but we are able to systematically actually present them and try and sort of move forward, make it easier for those coming after us to try and disrupt us, if you may. But how do we make the ecosystem easier to participate in? That's one question I'd love to hear from all 3 of you. Just how do we organize ourselves better? Second, at a policy level, I think, Varun, you said something very, very real, which is, if it's a category where people don't appreciate the need for the product today, the benefit, if any, comes only when there's some sort of major life event, accident, disability, death, disease. How do we actually introduce gamification or perhaps even incentive for people to enter, but without violating the trust of the customer that you're making fraudulent claim on the product itself? What are alt methods, if you may, right? How can a PolicyBazaar or a PhonePe be allowed to incentivize on the distribution side, or manufacturers be allowed to incentivize on the manufacturing side, new to category customers? And I've seen this even in lending. I'm seeing people sort of giving benefits, if you may. So those two questions, and Yashish, will start with you, sir, because again, you have a fantastic vantage point on conversion funnels. You've been playing in this market across all the verticals with all the players. How do we organize ourselves better as an industry? And what do we do to make insurance go more mainstream from the marketing and gamification standpoint? Because that is something that's worked in every other fintech vertical right there.
So thanks very much for giving me that opportunity. And I think, see, we have to face the reality as we try to solve the problem. The reality is every player in the industry has got a different position in the industry. And, of course, there is, the Life Insurance Council, the General Insurance Council, which has all the insurance companies in there. And within the insurance companies, there are, different segments of companies, people who like bank assurance more, people who like agency more, people who like direct more. And so even that becomes a little difficult. But I'm sure that's in every industry. The programs that you had in the mutual fund side, they have been tried on the insurance side as well. I'll give you one little example. Right? I remember long ago, Google once came to me and they said, we want to hold a savings day for insurance. And I remember telling them that don't do it, you will harm rather than benefit. And that's actually what happened, because the products were not in a stage where the consumer could understand them and still buy them.
Mm-hmm.
Right? So that element was quite large on the life insurance side. That's not at all true of health insurance or general insurance, by the way. But that is true of a lot of the investment category side, right? Where the more you understand it, the maybe at that time, the less you wanted to buy those products. And so it wasn't, right? So let's understand all of this. Now, how do you solve? Why is this problem there? This problem is there because every company is trying to act like a monolith and trying to build a single uniform distribution mechanism across the entire country. Everyone is trying to do that. We are a very vast country. You have to have specialized distribution. Every company, many companies are trying to set up their branch network across the country. If you're a small organization, how exactly do you set up? And I'm saying all this because a lot of it is still offline. So how do you set up a branch network across the entire country? How do you go and compete with let's say, a life insurance corporation or somebody with the banking access of an HDFC or ICICI? How do you compete with that without? And that is exactly, I'll keep my entire argument to a single point only, because, in these places, I think that makes sense to me. That has to be solved through the MGA route.
Okay.
Because in an MGA route, everybody can have the ability to develop technology, service their customers, do everything that is required, which actually does not require regulatory control. What is the regulatory control required for? See, why is Anuj or Varun different from a guy standing on the street? The reason they are different is because they say, look, dear customer, you take this policy from me. When you have a claim, I will be good to pay you.
Mm-hmm.
And that regulatory capital is protected because that is what the regulation controls. That these companies will always have the money to fund those claims, which is exactly what banking is. Banking is the savers who put their money there. That money shouldn't disappear.
I think you're making an argument saying separate the balance sheet risk from the players constructing the products for the market and distributing them.
You have to, exactly. And that is what the banking sector has done through the NBFC route. Most of the innovation has happened in the NBFC route, and then the bank can easily replicate it. And everything doesn't need to be, today you have specialist, companies that operate in a particular region, that operate in a particular area, and that specialization will come here as well. It automatically will. But you have to allow the NGA. That is when a Varun would not need to go through the trouble of actually setting up a company. He could become an NGA to, maybe not an Anuj, because Anuj's company is already very efficient, but to somebody who's not so efficient at it. and be able to provide all those services to that company. Now, I don't know whose interest that's not in, because that will actually help all the companies. That will actually help innovation. That will help consumers do whatever. And people like you, us, can do everything, except for the fact that we're not carrying the capital guarantee is still the insurance company.
Mm-hmm. It's a lot like the US model in that sense. You can have very, very large insurance companies, but the risk is underwritten one level behind. So I guess...
Sameer, you cannot expect every company in the country to have a uniform distribution mechanism across the entire country. It's not feasible. There's some very new companies, right? And, there are companies doing 10 crores, 20 crores a month. How exactly do they go and build a... You get my point, right? It's not economic. It's not economic. So, and that is where that piece needs to come in.
Yeah. And I think that's very, very fair, because we've seen this, including in our industry. The cost of breaking out is actually in the hundreds, if not thousands of crores today for a market this size. It's not easy to go pan-India, even digitally. Forget physically. That's a sort of fool's notion that you can do that in any short order. I don't know a bank that's done it in less than a decade and a half, maybe two. I don't think fintechs can either. It's an expensive proposition. It takes time. But Varun, I'm going to go back to you for a minute before I go to Anuj. Since you brought up the gamification and you brought up the pain points around sort of early adopters coming into the market. Given that we are here at a Niti Aayog event, and I think they have been great proponents of sort of change and financial inclusion. What are the one or two things you would like to actually recommend as a change in policy, and what are the guardrails, to be fair, right? So that we don't have the wild west, but what are the guardrails you think should come with those? If you had a sort of day in the life of XYZ, what would you do?
I think structurally, maybe three things I can think of. One is distribution access. So one is the licensing that's needed, which there's an MGA construct, and it takes 1 year, 2 years to get licensed. I'm saying something even simpler that can be done much faster. Is today you've had to take a license. Yashish has a license. Even distribution needs a license, right? So it's not anybody who has customers today. It could be, I'm just making a name, Lenskart. Great business. Why can't they sell insurance? They cannot. They have to take a license. Today in the physical world, an insurance company is allowed to appoint an agent or a boss. Even brokers are allowed, PolicyBazaar or any broker or anybody who has a broking license. Why can't we appoint digital distributors? If we can appoint physical distributors, why does every digital entity need to have a license? Half the people I don't think want to sell because there's license, there's additional burden of compliance. I think insurance companies or already licensed stakeholders, brokers or insurance companies would be more than happy to take the compliance burden of appointing a digital distributor further, embed APIs, do whatever is needed, right? So, because that's allowed in the physical world. And I would argue there is far more trail and auditability in the digital world than there is in the physical world. So I think if we...
Digital DCs.
Yeah, we should just be able to... I'm saying there's an API architecture, we're all connected. I don't see why we should not proliferate on every damn app out there. Whoever wants to sell, today, and monetize, right? In some sense, it's about creating access, right? And why shouldn't telecom companies not be distribution? I think, yeah.
I love that idea. I want to build on that a bit though. If you're talking about anybody being able to distribute, then you'd want some level, and without licenses, you'd want to theoretically standardize at least APIs and controls. Does that mean that we need an NPCI-like or an ONDC-like central framework, or would each manufacturer publish their APIs? Because the combinatorics explode, which makes audit really hard, right? Is there a middle tier public-private collaboration platform or an open platform architecture required? Or are you proposing that everyone who's a manufacturer should simply be able to tie up with the equivalent of digital business correspondence in the insurance industry?
Yeah, I am saying it's. I'm not even sure an open architecture. I think the architecture exists today. Theoretically, PolicyBazaar, with its entire stack built over so many years, could plug into many other platforms. It just doesn't need.
Varun, if I may,
Yeah,
exactly the same thing. Look, we have PolicyBazaar, which does loans and credit cards. It does not require any license.
Mm-hmm.
The day it decides to take some risk on its balance sheet, it has to get an NBFC license. And with an NBFC license, it can pretty much do everything except taking savings accounts and a few other things, right? And then, of course, if it does decide to ever become a bank, it can become a bank. That framework is the one that is allowing innovation there. Because it's a three-tier framework. You have bank, you have NBFC, and you have essentially a distributor, and the distributor almost has nothing like a licensing.
Is the one in the middle that you're talking about the MGA? I think Yashish, you're saying.
I think it's both. I know I'm speaking about both. I'm speaking about what Varun mentioned as well. It already exists in the banking framework. PolicyBazaar has no license whatsoever.
We've not had one, to be fair, for payments. While we've had adherence standards, guidelines from the NPCI side for UPI, none of the third-party app providers, including us, needed a license. It has been just introduced. Now there is a formal payment aggregator license required. And for the first time, everyone's sort of trying to figure out which side of the fence they're going to be on, because I think some will drop out, as Varun said. Some of the larger tech companies don't want to be taking a regulatory license just to distribute. This is a real problem. Anuj, if I may just sort of get over to you for a minute there. From your standpoint, if you look at the digital landscape, and you were talking about getting your products out to the largest number of people, what are the biggest barriers you're seeing, both on the physical and the digital side? Where would you like to see a lot more innovation, whether it's from companies or policy or regulation? But what are the big barriers to growth over the next 5 years that prevent us from having a healthcare revolution, health insurance revolution, rather?
So, Sameer, first of all, I think, and this is again for budding entrepreneurs, they don't know what PolicyBazaar and PhonePe have created for them. I think the level of awareness PolicyBazaar has created over the last many years, right, through its relentless advertising, I think has really taken insurance to the masses in this country. I think today we can think of digitizing all our processes, because finally what we are doing is a low ticket sale. And those, as we are entering into newer segments of customers, those ticket sizes are only falling. We're able to do those tens of thousands or millions of transactions because of payment platforms like yourself. So I think as I reflect, because I'm a dinosaur, I've been a part of this industry for the last 2 decades or so, and I've seen it evolve. I think when we used to think of ideas about 10 years ago on wanting to do a wellness product, wanting to do a top up, so on and so forth, we would struggle because we wouldn't know how to collect money. When we would go after a new segment, very often the biggest barrier was, how do you build awareness? I think through all that has happened, a lot of those things have become accessible and possible now. Now, when we want to enter a segment, we don't think if they're going to be aware of insurance at all. We know everybody is aware of insurance. We have to do the right product, and we have to put a payment gateway in place and push it out there, right? So a lot of those things, the building blocks have started to come together. So that's the first, I think, the big one for young entrepreneurs, that it's a lot of things, a lot of building blocks have fallen in place. My own view, if you want to, as we scale health insurance, undoubtedly we have to solve for the access problem, right? We need more distribution. We need every point where a consumer would be comfortable engaging or wanting to buy this product, we should be present there, right? Whether it is a chemist shop, whether it is a hospital, whether it's a diagnostic whether it is taking a taxi ride. Any of those points where the consumer would like in a bite-sized contextual basis, or be able to, would feel the need for the product, we should be present, right? I think the regulatory landscape is evolving. I think it needs to evolve more in that area, right, to facilitate for this. I think an equal amount of work needs to happen on the way the whole healthcare ecosystem, we work with the healthcare ecosystem, right? I think because offering the product and not fixing up the entire servicing would pose bigger challenges. And we would need a lot more standardization, right? The way we deal with healthcare providers, with the healthcare fraternity, with the way prescriptions are written out, so on and so forth, right? And I think we're all underestimating the impact that eventually NDHM is going to have. And hopefully that can kind of solve for some of this coming together. So my view is, again, that I think there is progress. We can argue that it should be much faster. It should be more in a more structured way, as you mentioned, as some of the other industry segments have seen, right? And I think that should only help accelerate growth for these, for our segment and for allied segments in that sense.
So you mentioned having distribution touch points, physical, digital, everywhere where the customer's at. I think personally, I'm waiting for a day, maybe the MGAs get us there, maybe just more participants get us there. My pipe dream for insurance, when we entered this category, was that I hope not too many years out. If I'm at an airport and I want to actually buy my travel insurance, like my alarm clock, I can turn it on and pay on a daily basis, and then I return for my travel and I'm done. There are certain products that just, I think it just not met what the market needs. Suitcase. I remember there used to be this thing in India about 20 years ago. You could get travel insurance. That big ticket selling item was that your bags are secured. And even today, if I want to actually get travel insurance for international travel, is this 1 year policy that keeps coming my way? And I'm just trying to think of how many human beings travel for an entire year at the same time. Why can't I actually get not even a sachet, just on the go? There are so many different categories I can think of. People are going into the mountains, or they're going on a vacation. They want to get different types of health insurance. So let's talk about the product side for a few minutes. We've talked a lot about the sort of manufacturing side. We've talked a lot about the distribution side, obviously, but from a pure product innovation side, whether it's customized or personalized products or sachets or just niche products, is there enough happening in the industry, guys? Is there enough innovation happening? Is the imagination fertile enough? Are we building the products for Bharat, as we call it, not just India? Your thoughts on that? What will it take to really sort of have Delta 4 innovation on that front? Because we are a country of 1.4 billion. We need very, very different products for different segments of society. Is enough happening? What else can be done?
Sameer, every product you spoke about, each one has been created in the past, and they exist. Now, the challenge is they don't exist across the board. And why does that happen? Right? Let's get to the crux of the problem. The problem is, on a group platform, you're able to create products on the fly. But on the retail platform, you're not able to create many of these products on the fly, even if they exist in a structural format already. So, let's say you spoke about switch on, switch off travel insurance, right? If Anuj or Varun want to launch it to the retail market today, not to a group market, then they have to go and get an approval, which there is a process on, right? And I think some of these processes can be very quick. In a sense, many a times the distinction between group and retail is very blurred. It's very, very blurred. Let me put it very simply. If the person is on PolicyBazaar, he's a group. So, if the person is on PolicyBazaar, he's not a group.
So I have the blessing of ignorance in this sector. So I'll ask the very naive question. This is something that, like, when I sit in my product team, I just scratch the remaining 4 hair I have left. Why this big distinction in treatment of innovation on group versus retail, since you brought it up? For somebody who's sitting on the outside, listening in, what do they need to understand about group versus retail product creation?
I wouldn't even go there. I wouldn't even go there. My view is what we spoke about. 2 areas need to be loosened up for the market to really take off. One is product innovation. Every time I go to Anuj and we speak about a product, it should not take 6 months. It can take 6 hours. Mm-hmm. If Anuj's actuaries fully agree, and if we have a distribution construct that can make it happen, or if we can go direct and make it happen, it should take 6 hours of mental thought process of the person who's technically trained, etc. And they can inform the regulator, and in 15 days time, if there's an objection, the regulator can always come back and say, no, I don't allow this product. And of course, they've got a license, they've got a lot of capital at stake, so they're not making decisions willy-nilly just like that. They can be trusted with that aspect, right? I think that is one area. And on the distribution front, as I said, the 3-tier structure, the insurance, who's the capital control, the MGA, who is the person who's responsible, the second level of control, not capital, but service, mis-selling, all those kind of responsibilities are at the MGA. And the third, where even that responsibility is not there. But you're a distributor, but it's Acko's product or it's Anuj's product, it's on my website. I'm doing nothing, I'm only displaying the product. How exactly can I be mis-selling? Right? I've just put it on my website. It's their product, it's their capital, everything is theirs. Right? So I think those 3 levels of distinction, if they get created, and if the product control is largely provided to the insurers, they have to approve every product. But they can, I think that would, as they say, make 1,000 flowers bloom, and make the market kind of take off. It wouldn't be controlled growth. It would be very organized growth where the capital control is there and the mis-selling control is there, because you've got probably 500 MGAs who can be controlled, and you've probably got 50 insurance companies who can be really controlled at the capital level.
Thank you, sir. Just doing a quick time check. I think we're going to be about 2 or 3 minutes away from winding down here. So we'll request panel comments. Varun, go in the opposite sequence this time. Your advice and your thoughts, parting thoughts on this panel for the college students, entrepreneurs, industrialists, anybody listening in. What does Varun Dua have to say to them about India's insurtech industry's prospects over the next 5 to 10 years?
I think it's all great. There's just so much secular growth and so many unsolved problems. And frankly, and I say this with all humility, not with any arrogance. For the last 7-8 years on any insurance panel, there's only Yashish and me. And I say this with all humility and not any arrogance at all. We would love. I think there's just lots of problems to solve. Like Anuj mentioned, there's on health insurance, there are 3-4 areas. There is the data problem to solve. There's the distribution problem to solve. I just think that the category has a little bit of pardon me for saying this, a little bit of a boring lens to it, relatively. I think, but there's huge wealth to be created. Like Anuj said, there are huge problems to be solved. There are huge technology and data problems to be solved. So it's a very, very exciting space to be for the next decade or so, I think.
Thank you. Anuj?
I think, like is the case with most industries in India versus rest of the world, I think that a lot of our problems are understood, but solutions of the Western world seldom work here, given the cost structures, market structure, and so on and so forth. So in that sense, I think there is a massive opportunity for young entrepreneurs. And I think if they're able to solve, and I'm sure they will be able to solve for here, and we've spoken about some of the opportunities, I think the opportunity to take it to other parts of the world, I mean, we've done some things here. We've gone into the UAE and we are just surprised at the kind of response we are getting, right? And so on and so forth. So I have no ambiguity in my mind. I think a lot of the building blocks have come into place. Rome was not built in a day. A lot of other things, good things will keep coming in. But I think there is huge opportunity.
Yashish?
I think the opportunity is huge. I think, I also feel one small thing, which I must say, there are a lot of very technocratic CEOs out there who sometimes don't get their due justice. Like I genuinely, I'm not saying it because Anuj is on the panel, and not just Anuj, but I think a few more. Like Anuj was the CTO of ICICI Lombard, and then the COO, and before that he had his own startup way back in 2000, which was a chemicals product. All I'm saying is, when you think about it, there is nothing non-digital about what Anuj's company is from day one, right? And I think sometimes that doesn't really come out on the whole, and we make two stark distinctions between digital, non-digital, etc., etc. Insurance as a product is digital. I think we have to really start to solve these core issues of why are we structurally stuck. And I think there's a huge opportunity here. Whatever we're talking about, I think will happen in the next 3-4 years. It just will happen because that's the structural change that has to happen for India to kind of take off on, on the insurance angle. And I think we will definitely have hundreds of entrepreneurs coming into this area because as you correctly say, right, this is an area which is ripe for innovation, hugely ripe for innovation.
Thank you, Yashish.
Yeah, I'm going to make an important comment so that it'll give context for this discussion. What comes first, right? If you are solving for the right thing, when PolicyBazaar was set up, there was no web aggregator license in this country, but they were democratizing insurance, making it more consumer centric. Regulation followed. So do the right thing for the right segment of the market, and regulation will support and follow. Nobody will ignore. We've seen it firsthand over and over. So which is why I feel so confident making that statement.
That's a beautiful note to end on. And thank you all for taking the time. Thank you all for sharing your insights, your learnings, and the euphoria for the future. I think I take away from this panel two things fundamentally. Lots of different types of problems to be solved at every step of the sort of overall funnel, from product market fit, manufacturing, distribution, engagement, awareness, which I think Yashish is right. I think in the next 3 to 5 years, many of these things will start falling into place at scale. I think InsurTech is on a lag in India, I would imagine, compared to some of the other sectors in terms of also attracting some of the, what I call irrational venture capital and funding that sometimes I think is actually helpful at times. I think sometimes just stirring the pot helps. And I think the second part to it is, I think for young entrepreneurs trying to actually find green spaces, this is a sector where you can actually impact millions and millions of lives as a force for good, build the right products, build the ethical products. And I think the market will also actually, I think this is something where insurance is actually quite different than other sectors. People don't remember the insurer until they need to file a claim, but nobody forgets a good claims experience either. And I think there's a lot of room for innovation here, from technology to data, as Varun said, in terms of having good governance, good ethics, building the right product value proposition. So thank you so much for your time, gentlemen. And on behalf of Niti Aayog, for whom we are helping organize this event, great to have you here. Thank you.
Thank you.
Thanks, Sameer. Thanks, Varun. Thanks, Yashish.
Bye.
Thank you. Thank you all.